In this video, traders, we're going to have 5 steps to recover from a trading slump. Stay tuned. Hey traders, a warm welcome to you. Thank you for joining me. All right, so we've all been there. We've all been in a situation where we cannot trade at all. Every single trader seems to be a losing trader, seems to be buying high, selling lows, getting stopped out on the low tick. It just seems to be a catalogue of disaster. And it's so bad for obviously our capital. It's so bad for our emotional well-being. It's just a bad way to be in. So what are the 5 things we can do to, when we come across this, which we will, and we will again, and we will again, and we will again. It's part of the process, guys, and how you deal with it. Ultimately, same with anything, but how you deal with this really does tell how quickly you'll bounce back. And the sooner you can get a grip on stuff, the sooner you can appreciate, hey, this is a slump, whatever is causing it, we'll find out, etc. As soon as you can stop digging the hole and stop the rot, the quicker you can get back to where you were, and you can keep pushing on. And that's the key to it, is not to let these slumps become longer term things that really devastate you. All right, so 5 things. Let's start with step number 1. Step number 1 is just stop trading. It's super hard to do, I know, because all you want to do is get that account equity back to highs. But it's the best thing to do. It's the hardest but best thing to do. The professionals do it. The best traders in the world do it. They say when they're in a slump, they just stop trading. And it's remarkably hard to do because you want to keep trading and kind of disprove the slump. You're like, well, okay, if I just keep trading and I make some money back and get some good trades, then it won't be a slump. It will be this. You just accept it, stop trading, close down all your positions, exit all your positions, do not trade. That's the first step. It's the hardest step, but it's the first crucial step. All right, guys, number 2, don't look at the markets for at least a week. Now adjust that to your time frame you're trading. If you're swing trading, maybe that's a month. Day trading, a week is perfect. It's the minimum, maybe even more, but just don't look at the market. So you know what? They will still be there when I come back. I am not going to touch them. I'm not going to look at them. I don't care if the thing is going up to 1 million or it's going down to 0. I don't care. I'm not going to look at them. You need that complete refresh. The whole point is, guys, we're stopping, we're refreshing, we're analyzing, and we're rebooting. You know, think of it like, you know, turning your computer on and off for a hard reboot. But anyway, you get the idea. The point is we don't want any input because we don't want to be, number 1, lured back into the market. Oh, that looks quite nice. I might just take a trade on that. Number 2, making opinions on where direction's going to be. And number 3, we don't feel like we're missing out on stuff, because the whole point of taking the break is that, you know, we're not trading. We don't have that, oh, we're missing out on stuff. So don't look at the markets for a week. Number 3, guys, spend time thinking. Yes, just thinking. No music, no television, no videos, no podcasts, no audiobooks, nothing. Just thinking. Allocate time to just think. And your mind will start to obviously wander to that because it's an important thing to you. Your mind tends to wander to what's important to you at the time. And you'll start to think about things. And if you just think through things, don't beat yourself up, don't go, but just let it kind of stew and work its way out, if that makes sense. And the fact that you haven't got any external stimuli just lets it kind of process itself in the mind. Then you can start to think, okay, you know, it's not so bad. I can get out of this, and you become more positive about things, etc. So it's really good to just have that thinking time. All right, guys, number 4 is then you look what really happened. So after you've taken the time off, you stop trading, you've done some thinking time, and then you look what really happened. So it's now time to go back, look at your records, look at your journals, look at your account trades, etc., blotter, and go, right, what happened? Is it one thing that's caused a catalyst of this? Is it market conditions? Is it 1 or 2 bad trades that have triggered this? Is it just the type of trade I'm doing? When you have this produces clarity to make this part look at what happened much easier. When you go straight into that and try to solve it, you go in there with, you know, goggles on, you go in there with clouded vision because you're all kind of emotional up, you don't know what's going on. This whole point here is to reset, go back to 0, and then you come in with fresh eyes. You don't have any objective, you don't have any kind of emotional attachment to it. You're just looking at it and saying, listen, this is what's happened. Look, I can see that I started trading this instrument here, which really was a downfall, and then I tried to get it back there, and that really was it. And really, if I hadn't done that, okay, so what now can I put into place to stop that again? And that's when you go ease back into it slowly. So once you've identified what happened, once you've put into place a plan of action to stop it happening again, or to listen, slumps are always going to happen. We can't eliminate that. And that's the thing that we get to be comfortable with. But if there's something specific that's put you into that, maybe we can identify it quicker, and so that cause of a slump can be throttled back quicker and we can lose less money from it. Like if we're transitioning, say from volatile market to very quiet market, and for me that's, I'll be very careful of that. So I'm mindful now to be making sure I'm checking regularly the volatility is still there, etc., throttling back trades, because I don't want to be trying to extract blood out of a stone and dig in a hole just for churning away. So whatever it is for you, once you recognize that, you can put that into your process and move forward. And it's easing back into it slowly. So small size, 1 or 2 trades, just get back on the saddle, so to speak. Just get your process refined, get used to the screens, get used to what the markets are doing, the new levels, because you've been out of the market for a while, what's driving the market, what's the news, all the stuff that you look for. And then small trades, gently back into it and build it back up. And that's a good refresh process to resetting, drawing a line under it, learning from it, but then getting straight back on when the time is right and pushing to get that account back up to fresh highs. Take care, guys, whatever you're doing, and I'll see you in the next one. Goodbye.